Given the WeWork fiasco, it's not surprising that Masayoshi Son's investment strategy is now under fire. Tell us how he's valuing these companies.
Okay, so there are two main times that SoftBank will value a startup company. So one is when it makes its initial investment in the startup, and that's when you see the sensational headline, SoftBank investing in a startup at a $20 billion valuation or a $30, $40 billion valuation. And then the other time that it has to evaluate its companies is every single quarter when it's trying to deliver its quarterly financial results. And those are the results that draw a little bit less scrutiny, but perhaps have the bigger impact on the company.
So then let's just talk about, obviously, SoftBank has heard from some of its investors. Is the concern here not that it had a big blow up, which it did? That happens in venture. It makes big bets. It has big losses. Is the concern that it goes into a more systemic practice than that? In other words, that it actually has a problem with its valuations that investors are now worried about?
Yeah, I mean, when you see one flame out like that, you have to wonder, how are they valuing the other late stage startups on their books? And it's a great question. Startups can be valued in very different ways. There are a lot of different factors that go into it. And maybe it's overvaluing some of the other startups. Maybe it's undervaluing some of them. Who knows? It's just an art more than a science. And like a lot of venture firms, it's running into difficulties evaluating them correctly.
To your point, Sarah, then, is this more of an issue with the era of unprecedented speculation on unicorns when it comes to trying to value these companies and the accounting rules that they must follow?
Yeah, I'd say that the accounting rules are incredibly out of date. It used to be that these unicorn companies were so rare that it didn't really matter. Now we have over 300 unicorns, and in the case of SoftBank, their values are being reflected on publicly traded companies' balance sheets. So we have to come up with some sort of better way to value them. Right now, there are all kinds of different and accepted practices. You can look at the comps of publicly traded companies. You can look to see what the last investment round was, how many investors were in it, how much they invested, or you can try to predict the cash flow in the future of the company, or you can do some sort of mishmash of all of those techniques. They're all accepted, and maybe there needs to be some more rigor around this process.